to talk to us about the developments in the currency markets. We're joined by Mr. AV Rajwade, consultant in currency and international rate risk management. Mr. Rajwade, thank you so much for joining us on NDTV Profit. Do you think the kind of extension that we're seeing on the rupee and the weakness that we're seeing will get capped in perhaps a day or two, or is this going to be solely a factor of how the crude oil prices pan out from here?
Well, I don't think it's merely a question of the crude oil prices. I think the most important element in terms of whether the slide stops in a day or two or in the short term is going to be what the central bank does. I think in general, it has been much more concerned about a falling rupee than a rising rupee. So I think where the rupee will be in a couple of days or later this week, I think a lot depends on what the central bank has in mind. In terms of fundamentals, I think a fall of the rupee is needed. In fact, a bigger fall is needed than what has already occurred in the last week or so, because our tradable sector, I think, is still extremely uncompetitive. We had a trade deficit of 150 billion last year. And I think that deficit really means that much lost output, that much lost employment. So I think the real economy needs, for it to be competitive, it needs a cheaper rupee. Right. That's a costlier dollar. But as I said, if you are in the short term, it's all going to, what I feel the economy needs is one thing. What the central bank might do could be something quite different.
Right. What do you think is the level that the central bank will be comfortable with? Because, you said they come in when it weakens quite a bit. So what's their tolerance level that you think they can tolerate?
Sort of one, it's very difficult to give a numerical estimate. But I think one indication is that the new index model and the new index numbers which the central bank has come out, I think it was early in April, that showed that at the average rate of 2013-14, that is the last fiscal year, at least by one of those measures, the rupee was overvalued by something like 17 or 18%. Now, and the average rate in 13-14, if my memory is right, was around 60.50. So if at 60.50, the rupee was so much overvalued, I think that the arithmetic is simple. The other side, of course, is that the empirical evidence in terms of the trade deficit also evidences that the currency is overvalued, that at that kind of exchange rate, the economy is not competitive in global markets.
Right. Mr. Rajwade, last time when I spoke to you, you did mention that you are not going to, you don't give a level to what is the comfortable level for the rupee. But according to you, what is the range that the rupee should settle down now in the next, say, 3 to 6 months?
Well, I think the question is the answer to would be quite different from should.
Should. Yeah,
in fact,
absolutely.
in my view, if the objective is economic growth and employment creation, we certainly need a cheaper currency. I think if you look back over the last 60 years of 70 years of economic history, every fast-growing economy has done so on the basis of an undervalued exchange rate and a rapid growth in the manufacturing sector. Our manufacturing sector as a percentage of GDP has been constant for 20 years. China's is over 40%. We are 14-15%. I think if employment is to be created, which is absolutely essential, if we are to grow more rapidly than what we have, and I think that is essential to create the employment, I think we do need a cheaper rupee. I know it will have implications in terms of the inflation rate, but I think a choice will have to be made what one prefers.
Right. But still, my question remains, what, according to you, should be the range of the rupee going ahead from here on in the next 3 to 6 months?
Well, my answer would be, I think 3 to 6 months' time, probably something around 65. But whether it would, I think it all depends on what the central bank has in mind and what is its comfort level. The impact on inflation. Now, inflation impact would probably be pronounced if the oil prices remain high. The fiscal deficit also has, the exchange rate also has implications there because there are subsidies on the petrol products still in existence. So I think purely in terms of competitiveness, this thing would be 3 to 6 months if we see somewhere around 65. That's something to be looked at. But I'm sure the policymakers will take into account the impact in terms of inflation, in terms of subsidies, and therefore the fiscal deficit, and so on. I think we'll have a better idea. I would not really like to sort of forecast 3 to 6 months before the budget.
Right.
And I think that's going to be next month.
Right. Very quickly, lastly, I would like to have your thoughts on the statement made by the Prime Minister, who is warned of tough decisions over the next couple of years to improve the country's financial health. Do you think that now the government is going to focus on less on populism and more on those tough measures to get the economic health back on track?
Well, I think I don't know what exactly was the financial health he was talking about. But if we look at, we could look at it from two different perspectives. Number one perspective is the fiscal deficit. Now, fiscal deficit is high as a proportion of GDP. On the other hand, thanks to inflation, the proportion of central government's debt to the nominal GDP has been coming down year after year after year. So I don't think, to my way of looking at it, fiscal deficit is not something that should be unduly worried us. Yes, I know it worries the rating companies, but as I said, the best measure is the central government debt as a percentage of nominal GDP, and that has been coming down year after year. What is more important in relation to the deficit probably is the quality of the deficit. Quality has come from revenue expenditure, not from investment expenditure. So I think sort of one measure is that. The other, where I think we need to have much greater concern, is the question of the external strength of the economy. Our net external liabilities as of 31st December were of the order of something like 315 or 317 billion. Now, there is a limit up to which those liabilities can grow. We'll have to put some kind of a cap there. And yes, that certainly is a matter of concern to me, more than the fiscal deficit.
All right, Mr. Rajwade, many thanks for joining us here on NDTV Profit and sharing with us your views on how the new government should now start focusing on the things that the government should start focusing on. Shouldn't really worry much about the fiscal deficit and the rupee there on your screen.